Most traders come to this very confusing part of their trading journey once they've been given a profitable strategy that works and they realize that they themselves cannot stick to that profitable strategy and reap consistent profitability like they see some others doing. And the reason for this is very simple. It's because trading is a lot more than just having a profitable trading strategy. There's a mentality, there's an attitude, there's a psychology, there's a way to think that you need to master as a trader if you want to have consistent profitability. So what I'm going to do in this video is I'm going to give you a comprehensive guide on how the top 1% of traders think. I'm going to give you the complete overview. If you were to just watch one trading psychology video on YouTube for your whole trading journey, make it this one. I'm going to share with you exactly what you need to know. I'm going to give you the solutions, and I'm even going to give you a tool that will help you apply what I'm going to share in this video to ensure that you actually get a return on investment from watching this video. So make sure you watch all the way to the end where I give you the specific tool and I show you exactly how to apply it into your trading to ensure that you get consistent profitability and scale your funded accounts, get payouts, and get the rewards that you deserve as a trader. So let's get into it. Now, your job as a trader is very, very simple. The first thing you have to do is you have to wait for the market to meet your trading criteria. You have a trading plan that outlines your edge, how to enter into the market, exactly specifically what you need to get into the market. Your first job is now to wait patiently for the market to meet your criteria. The second job is to execute when the market aligns with your criteria. You're waiting. The market aligns with all your entry criteria. It's now your job to execute on the position, to place the trade when the market aligns with your criteria. Your next job as a trader, if you want consistent profitability into the future, is to win big, to let your winners run, and to even size up on your winners and scale into your winners when the market is giving you confirmation of an impulsive move. So your job now is to win big. And your last job is to lose small. If the market aligns with your criteria and you enter into the position, you put risk on in the market, then the market shows you that it's not willing to go in the direction that you once thought because of the edge, because of the probability model, it's now your job to cut your losses quickly and keep them small. So it's your job firstly to wait for your criteria, to execute when the market presents your criteria, and then to manage your risk. Scale up when the market's showing you that it's moving in the direction you anticipated, and to cut your losses when the market shows otherwise. So let's put this on a chart. The first job here is I'm looking at a particular trade and my criteria states that if I pull back to this particular zone, the 382 Fibonacci level where that little zone is marked out with a few other criteria, that now meets my trading plan and my trading criteria. So I'm waiting patiently for that. And then the trading criteria is now met. It's now my job to buy the low or buy the fear to anticipate the move to the upside. Okay, so I've waited, and now when the market's met my criteria, all my criteria has been met, it's now my job to buy the position or to take the position, to take the trade. Okay, now if I get into the trade and the market shows signs of it moving against me or it not moving the way it typically has based on my previous backtested data, it's now my job to cut my losses quickly, okay, and to lose small, to manage my risk. Or if the market shows that it's moving in my favor and it confirms my anticipation of that move, it's now my job to win big and to scale up to ensure that I can fully capitalize on the move. So that's, in a nutshell, your job as a trader, okay? And it seems very simple. It seems like a very easy thing to do, to be patient, to wait, to execute when the market says your criteria has been met, to scale up when the market gives you the opportunity and to cut your losses quickly. And in fact, you want to take all those components and put them into a trading plan and make it mechanical so you don't have to think of it as much as you think you do when you're trading. Okay? And that seems like a very simple idea, and everybody watching that up to this point is probably thinking it's quite easy to do. Now I want you to assume that I've given you the Holy Grail system, the Holy Grail trading system that allows you to do that. It shows you exactly when to get into the market, It shows you exactly when to get out the market. It shows you exactly when to trade big and scale up, and it shows you exactly when to cut your losses quickly. And I've given that to you. And I'm going to tell you that that particular trading strategy has a risk to reward, an average risk to reward of 3-to-1, meaning every win is 3 times more profitable than every loss. And I want you to imagine that I also tell you that that trade, that particular setup has a strike rate of 65%. So if I take 10 trades, I'm going to win. If I take 100 trades, I'm going to win 65 out of those 100 trades. And each of those wins is going to be 3 times bigger than the losses. Okay? And let's imagine I've given you that particular holy grail system, and I just feed that to you and you have that. The thing that will stop you from consistently trading that strategy and having consistent profitability with that strategy is fear. Because what's going to happen now is fear is going to kick into your trading. When you're waiting for that pullback, although you rationally and intuitively know that I'm going to buy from that particular level that's a little bit lower than when price is now, what happens at that point? When you're waiting for price to pull back to your entry criteria, what comes into your mind? FOMO creeps in. You start building this story in your mind. What happens if this trade goes against me? What happens if I miss out on this particular position? What happens if all my friends and trading buddies get into this position without me? What happens if this trade goes and I look back on it and it could have helped me pass my funded account, but I wasn't part of it? The FOMO starts to creep in. The fear of missing out. So fear can affect you when you're trying to wait patiently. Now, let's say, for example, you do wait patiently and the market now meets your criteria. The market has provided everything for you to enter into the position. What creeps in now? The fear of loss. What happens if this trade continues to run against me? The trades look like the right trades in backtested data because they've played out and you can see them playing out. But when you're in the real life market condition and you've got a full-bodied red candle that you're now looking to buy off the pullback, you could have the fear of loss in that moment. A fear of, I don't want to take another loss. What happens if this price just runs straight through my entry and hits my stop loss? Okay? So fear, the fear of loss can affect you when the market meets your criteria and you're meant to execute, but the fear of loss can affect you in that state. Or what happens when you're running profit on the trade and you know based on your trading plan and trading system that the market's giving you confirmation you should size up, you should trade larger size and scale in to fully capitalize on the move, but what kicks in here? The fear of loss of the profit you've made. You're thinking in your head, I'm up $1,000. What happens if I lose this profit, this unrealized gains? So in the state of when you should be scaling up, you have fear of missing out or losing the profit you've already made. Or if you're in a losing position and you know your plan says that you know you need to cut losses and get out the trade, what kicks in? If I cut my losses quickly, what happens if the trade goes without me? It just continues to play out. There's, again, the fear of missing out. So at every stage of what you need to rationally and objectively do to be a profitable trader, fear kicks in. And the fear of losing, the fear of missing out, the fear of being wrong, the fear of not being with everybody else is what kicks in. And it's fear that stops you from consistently trading a system that works, consistently trading the Holy Grail. And it's fear that stops you from having consistent profitability. It's fear that stops you from having your funded accounts and payouts from your funded accounts. It's fear that stops you from being a full-time trader and pursuing your goals as a trader. And guess what? We're all human beings. Fear is an integral part of being a human being. Okay? So as traders, we need to learn how to manage one of the most important survival instincts that we all have as a way to become a profitable trader. It can be done. I'm going to show you how in this particular video. I'm going to show you where fear comes from, why it's there, how to manage it, and how to squash it in situations when it needs to be managed. Okay? If you're about to be hit by a car, you're about to be eaten by a bear, or you're about to be attacked or mugged by someone, then fear is a necessary response to keep you alive in those situations. But when you're in an air-conditioned apartment using proper risk management, it's okay to manage your fear to make objective, wise decisions according to your plan. That's exactly what I'm going to show you in this video. Okay? Now, something about fear. It's not only fear that's stopping you from having consistent profitability and being a profitable trader. Now, fear doesn't come alone. Fear, you can't just have fear with nothing else in your mind. There's actually a mirror in your mind, and at every point of having fear, you are in your mind simultaneously contrasting that with greed. You cannot separate fear and greed. Fear and greed are two sides of a spectrum, and they're entangled. The best analogy here that I can use, I didn't put this into the PowerPoint, I wasn't going to share it, but it just popped to my mind now. If you have water, you can have hot and cold water on either side of the spectrum. Hot and cold water are the same things, they're just different degrees of the same thing. Fear and greed are the same thing, they're just different degrees of the same thing. You cannot separate fear and greed. And let me explain this a little bit deeper. When you have the fear of missing out on a position, in your mind, you're holding on to this idea of being part of that position. You have a greed of holding on to that position. You have a greed over what you think that position is going to give you as the outcome. So now your fear of missing out is on the greeds. So the moment you have the greed over an outcome of a trade, you have a fear of missing out on that. It's inseparable. Or the moment you have a fear of taking a loss, in your mind, you're contrasting that with the greed of having a win. The win feels good, so therefore you have fear of losing it. Fear and greed cannot be separated in your mind. The moment you have a greed, you have a fear birth. You have a greed over winning, you have a fear over losing that. You have a fear over losing, you have a greed over winning that particular thing, you have a fear over losing. Just stop the video and close your mind, close your eyes and think about that for a second. And go back to moments you had fears. You have fears over, or you have a greed over the exact opposite. Okay, whatever the fear, you have fear of losing or fear of coming into your life, you have a greed over the exact opposite. Okay, it's very, very important to understand. It's a very important concept for your trading psychology. A lot of people think that you can have fear without greed. Nope, you can't. They're inseparable states. One's conscious, one's unconscious. You're aware of one, you're unaware of the other. If you just stop for a second, hold yourself accountable, you're about to see it. It's really not that difficult to see. Okay? If you resent something, you're infatuated with its opposite. If you're labeling something good, you're labeling its opposite bad. Okay? If you're labeling something bad, you're labeling its opposite good. There's no escaping that paradox there. Okay. Now, let me just summarize everything we've just covered so far. And let me show you how this manifests in your trading. Okay, so you haven't entered the position yet. Price is coming close to your entry. And the first job as a trader is to be patient and wait. What fear comes into your mind? The fear that comes into your mind is the trade going without me, the fear of missing out. So this can sometimes lead you to placing on trades prematurely, early, because of the fear of missing out. And you get a poor price, you get a poor risk to reward, and sometimes the trade doesn't even set up part of your criteria, you take a loss. Now at the moment of having that exact fear of the trade going without me, you have a greed over making a certain percentage or dollar amount or passing a funded challenge or getting a payout in your mind. So at the moment of having the fear of the trade going without me, the fear is actually missing out on all those things you're greedy about being in that position. The percentage, the dollar amount, the fact that you think that trade's going to help you pass your funded account, or get you closer, or get you out of drawdown, or give you a payout, whatever it may be. So that's the first fear and greed that pops up. The next one is when you're running profit, and you should, as a trader, size up. The fear here is, I'm up $1,000. I don't want to lose this profit. Okay, what's the greed? The greed is the fact that you're up $1,000. You're infatuated with that profit. You only fear losing those things that you're infatuated with. If you're running a loss in that moment, you wouldn't fear losing the loss. You only fear losing the things you're infatuated with. So the greed is the fact you're greedy over being up that 1,000, or you're up a certain percentage, or you're closer to passing your funded account, whatever it may be. And the last one is the trade's running a loss. The fear that can pop into your mind is, if I close the trade down, I know I should cut my losses quickly, but if I close it down, I may miss the move. Fear of missing out, may go without me. And again, the greed is the move will bring me a certain profitable percentage, dollar amount. It may help me pass my funded challenge or get me a payout. These are all the greeds you fear missing out on. So I just wanted to put that into a table to show you that all your behavior as a trader that's going to stop you from having consistent profitability can be removed if you learn to manage fear and greed and learn to manage your trading psychology. And there are people out there saying that trading psychology isn't important. Well, the truth is, your psychology is tainting every single one of the decisions you make. Tainting is probably not the right word, but it's influencing every single one of the decisions you're making. So if you don't know how to manage your trading psychology, then you don't know how to manage your trading decisions. And the moment you learn to manage your trading psychology, you then have a lot more control over your decisions as a trader. And you can make decisions that align with your plan, that are more rational, that are more objective, that are going to lead to having consistent profitability as a trader. So let's go a little bit deeper. Your animal brain, I've specified your animal brain is designed for threat survival. It uses fear to keep you alive. Fear manifests from your animal brain, your amygdala, your limbic brain. Okay? Fear is there to keep you alive. It was more useful and more necessary thousands of years ago when our ancestors were in the wild and they had day-to-day threats because their environment wasn't as safe as it is in major cities nowadays, for example. But we are descendant of those same ancestors. We have those same hardwired threat survival responses inbuilt within us because human nature never gets rid of old things. It just builds new layers on top of. So we have that same hardwired response within us. But we need to learn to manage it in these non-life-threatening situations. For example, placing a trade. Your animal brain is wired counter to what is necessary to become a successful trader, to be a successful trader. Your animal mind is wired to be emotional and to react to external stimuli to keep you alive. We have to do the exact opposite as traders. We have to be poised, present, non-reactive. When the market presents an opportunity, we have to act, not react, act. Now, if we have a look at your brain and how your brain is set up, you have more of a limbic system, which is your amygdala. This is responsible for the emotions, detecting dangers, and reacting. We also have what's referred to as our prefrontal cortex. This is what's responsible for making objective decisions and strategic thinking. As a trader, if you're trading from your limbic system, you're going to be run by fear and greed. You're going to be scared or you're going to be greedy. You're going to oscillate between the two. Simultaneously, they're going to both be in your mind, but you're going to be an animal reacting to the markets as opposed to a human trading the markets. And if you want to be a human trading the markets based on your trading plan, making objective decisions, you have to be acting from your prefrontal cortex. That's what's responsible for the cognitive function, for thinking through and for problem solving, and for when the market aligns with your plan, you execute. Now, I know what you're thinking. It takes discipline, effort, and work to implement the mindset of top 1% traders. The top 1% traders trade from their prefrontal cortex, not from their limbic system, not from their amygdala. They trade from their prefrontal cortex, making objective decisions. The 99% of other traders trade from their limbic system. Okay? It takes no effort to trade from your limbic system. It takes no effort to be an animal. Think about it. How easy is it to eat shitty food and not work out and to sit down and watch TV and just activate pleasure centers through your amygdala and be addicted to pleasure all day and do absolutely nothing with your life? It's very easy to do that. It's very difficult to sit down, write down, and envision a life for yourself that you're inspired by, a business you want to build, or trading goals you want to achieve, or fitness goals you want to achieve. And then every single day be disciplined and meticulous in your action and work towards achieving those goals. It's very difficult to do that. It's very easy to be an animal. It's very difficult to be a human. This is why it's only the top 1% of traders that succeed. That's why it's only the top 1% of individuals who are disciplined and put in the work and the effort to work towards a goal or to a vision that have success in their life and in their endeavors. So yes, it takes discipline, effort, and work to implement the top 1% traders mindset, to quiet down your amygdala, to put your prefrontal cortex in charge. It takes time and effort. But if you want to be a successful trader, that's what's necessary. It takes work just like anything, okay? So make sure you're aware of that just to manage your expectations. And when we think about human psychology, we don't see things as they are. We see things as we are. And all our images and how we interpret our personal reality is filtered through our priorities, through our values, through our previous experiences, and we have our own unique interpretation of our reality. Actuality is what's actually out there. Our reality is actuality filtered through our priorities and our subconscious associations and all those types of things. A lot of things I've talked in my previous YouTube videos. But we don't see things as they are. We don't see the market as it is, typically. We see things as we are. And the more and more we trade from the limbic system, the amygdala, the emotional part of our brain, the more and more our interpretation of what's out there is skewed and distorted. Because the more and more we're in the amygdala, the more and more we have cognitive errors and biases, because those cognitive errors and biases are what kickstart the survival response in the first place. So the more you activate the prefrontal cortex, the more and more you see things as they are. And the more and more you see the market clearly and objectively for what it is, as opposed to your biased interpretation of what you think it is. So our animal brain is riddled with bias, in particular two biases. The confirmation bias is the top dog of biases. A lot of the other ones are subsets of confirmation bias, but we also have a bias that's called apophenia. And we see what we need to see to confirm our greeds, our beliefs, our ideas, and our bias. So when we're caught up in these greeds and projecting our bias onto the market in our animal brain because we're greedy and we want something, we want a certain outcome, we see what we need to see in our environment to confirm our beliefs and ideas. The actuality, what we're seeing out there, what we're seeing in the market, goes through filters. We let in what confirms our greed, our bias, our idea, and we block out what doesn't confirm our belief or idea. Our animal brain is not willing to see the inconvenient truth. It wants the reassuring lie. It wants the thing that confirms our belief, our ideas, our greeds. It doesn't want the truth. Okay? We also mistakenly detect meaning and patterns in unrelated events and occurrences. That's what apophenia is. Confirmation bias and apophenia. I've just covered the two. So as a trader, if we're trading from our animal brain, we're going to see this pattern, or we're going to see this particular thing, and we're going to try and make meaning out of it to force our belief or our idea. And we, in other words, trade based on our interpretation and based on what we want, and we project that onto the market, as opposed to seeing the market clearly for what it is and making decisions based on what the market's presenting to us. So if we trade from our animal brain, we're going to be riddled by confirmation bias, and we're going to be riddled by apophenia. We're going to be trading what we think as opposed to what we truly can clearly see. And the more and more we activate the prefrontal cortex and quiet down the amygdala, which I'm going to show you how to do at the end, it's going to be very simple. The more and more you trade from the prefrontal cortex, the less and less bias you have. Less confirmation bias, less apophenia, more seeing the market for what it truly is. We create an echo chamber when we're trading from our animal mind and false sense of confidence in our abilities to predict price. We create this initial belief and idea. We are so certain on that bias. We're so confident on that false confidence on that bias. And then we then look for ideas to support that, to continue to build that echo chamber, to continue to feed into that false sense of confidence, to then reassure ourselves, a reassuring lie as opposed to the inconvenient truth. How many times have you taken a trade, been in that trade, and because of an intuitive uncertainty in that trade, deep down you know it's not the best trade to be, and you then go and have a look at different pairs or you add different indicators on to try and convince yourself that this trade is going to be the trade you should be in. And you find unrelated things to try and find meaning and to try and reaffirm this bias that you're in the right trade. That is a sure tell sign that you shouldn't be in that trade, because deep down you're not certain in it. Whereas the trades you're truly certain in that align with your trading plan, there's no hesitation, there's no second guessing, there's no need to continue to reassure yourself, because you've already made the decision in that moment. You've taken the trade, you've accepted the risk, you know that this is a trade that's truly part of your plan. You don't think twice about it, you just take it. So if we have a look at the S&P or any price chart, the market's price movements are impacted by billions of factors. For example, the S&P 500 is the top 500 companies in America at any one point in time. Each of those companies have millions of different factors that affect the price of that individual company, times by 500, times by the world economics, factor in politics, factor in global trade, factor in supply and demand, factor in oil prices, etc., etc. If you put all the factors in, there are billions of factors and that influence the price of the S&P at any one point in time. Nobody knows what all those factors are. Nobody knows how each of those factors will affect price. Nobody knows how each of those factors will affect each other. So how on earth do we think that we could draw a few lines on the chart and a few things here and there and predict on each individual trade where exactly price is going to go? It seems a little silly, doesn't it? So who are we to think that we can predict the outcome of an individual trade? Now the key word here, I should have underlined it, is individual. We can't predict the outcome of the individual trade, but because of human psychology and because of repeating patterns and because of self-fulfilling prophecies in the market, we can have an edge to a certain confidence level that price will play out over a larger sample space. So we can make money by finding scenarios in the market that are more than likely to happen and trade them over a larger sample space. By having an edge and by recognizing certain patterns, over 1,000 trades, we may be right 600 of those times, or 500 of those times, or even 400 of those times, but we have a positive risk to reward. And as a result, we can be profitable over the large sample space, but to predict individually the outcome of each individual trade is impossible because of all those billions of factors. So it takes discipline. It takes a disciplined mind to not seek out the answer that you think or you want. And in fact, if you really think about it, it's very foolish to think that you can seek out an answer that you want, because there are billions of factors in the market. There is so much going on. Who are we to think that we can predict the outcome? It's only because of our animal mind that's addicted to pleasure and addicted to being attached to an outcome and then finding all these ideas, unrelated events and ideas to confirm why we're right, do we ever think that we can predict the individual outcome of a trade. So our mind easily jumps to conclusions. Your mind must be managed to trade successfully. And I want to do a little bit of an exercise, a little fun exercise to prove this to you, and then I'm going to show you the solution to this. So what I want you to do is I'm going to put some images up on the screen, and what I want you to do is tell me the color of the word. Don't try and read the letters. Don't try and read the particular word. All I want you to do is to tell me the color that that particular word is in. So we're going to go very slowly for the first few, and I want you to play along if you're at home and just do this to yourself and call these numbers out loud, or these colors out loud. Just have a look at the word and just tell me the color of the word. Red, green, purple, brown, blue, red. Okay, let's go again. Red, green, purple, brown, blue, red. Okay, let's go again. Pick up the pace a little bit. Red, green, purple, brown, blue, red. Okay, remember, you're just telling me the color of the word. Red, green, purple, brown, blue, red. Okay, let's do it one more time. And then I'm going to put some more images on, and you just want to keep going. I want you to, whatever firstly pops to your mind, I want you to call out the color. The first color that pops out to your mind. Let's go again. Red, green, purple, brown, blue, red. All right, let's do some more. Okay? Was that difficult? Did you find yourself saying the word as opposed to calling out the color? Okay, this is a great example to show how easily influenced your mind can be if you don't have a purely disciplined mind and you're incredibly focused and disciplined in that particular point in time. Your mind can be easily tricked and influenced, so you need to be on your A game. Okay, so what's the solution to all of this? How can we manage fear and greed in the markets so that we can clearly see the market for what it's trying to communicate to us, and we can stick to our 4 jobs as a trader? We can patiently wait without fear of missing out. We can strictly execute the trade without the fear of loss. We can confidently size up a trade without the fear of losing out the profit we've already made. And we can confidently cut losses quickly without the fear of missing out. How can we actually do that as traders, and how can we implement a process or a system that helps facilitate that? Let's cover it. It goes back to this particular idea that I discussed before. We do not have fear in our mind without simultaneously having the greed over its opposite. The fear is anchored based on the greed. They're inseparable states. So the greater the greed, the greater the fear. And the way that you actually manage fear in your trading is to manage the greed and to quiet down the greeds and to remove the greeds and the expectations on the outcome. The things you want from the market, or things you think you want, it's about crushing those and grounding those and releasing those from your mind. And when you do, you simultaneously remove the fears. So when we have a look back to this example here, the FOMO before you've entered comes in because over the greed and the unrealistic expectations and the expectations of what you think the outcome of that trade is going to give you. Like I've mentioned, there are billions of factors influencing price at any point in time in the markets. Who are we as traders to think that we, as an individual trader, can sit there with a few lines in our chart and predict that price is going to go to this exact point on that individual trade? Okay? Every single trade, who do we think we are? There must be a serious self-exaggeration there to think that we can confidently predict all those billions of factors and the direction of price. This video here is very humbling. I'm telling you that there's no chance you can predict each individual trade, the outcome of each of those trades. But the good news is you don't need to. You don't need to be addicted to a certain outcome of each individual trade. You don't have to be so attached to a dollar figure that the trade's going to give you. You don't have to be attached to passing funding challenges or payouts. What you need to do is outline your specific edge in a trading plan. You need to add in your entry point clearly, your management rules clearly, and your risk management very clearly. And then you need to consistently stick to that trading plan over a large sample space, and you will approximate those. You will have those outcomes as a result of doing the right process. And on each individual trade, you have to bring to surface and write down any of the expectations or greed you have over the outcome. Take them out your head. Write down everything that you expect the outcome of the trade to give you. Everything you're greedy about. Every dollar amount you think you can get from that trade. Every percentage amount you're going to get from that trade you think. What else do you think that trade's going to give you? Do you think it's going to help you pass your funded account? Do you think it's going to help you get a payout? If you do, write it all down. And then you want to remind yourself and write down next to it, remind yourself, Pat, there are billions of factors influencing price at any point in time. Who do you think you are that you can draw a few lines in the chart and predict accurately each individual move? Who do you think you are to think that the market's going to give you what you want on this individual trade? And you need to humble each of those greeds. You need to humble all those expectations. And then you need to ask yourself again and remind yourself, does this trade truly align with your plan? If it does, take it, free of those greeds, free of those expectations. If it doesn't, sit on your hands. And when you do that process of writing down all your expectations and grounding them thoroughly and humbling yourself thoroughly, you're not going to have a fear. Because the fear is only there over the greed. The fear is only there of missing out on those greeds. Okay? So this particular process is 2 tools I've left in the link in the description. You can either take what I've said and put them into your own tools, or you can use the exact step-by-step tools that I've created and I've been giving to my traders for years. It's the exact tools that I give to my six-figure traders to help them scale and to make consistent profits. Firstly, you want to have the six-figure trading plan template and ensure your edge is put into that template. And then you want to download the free Bulletproof Your Mindset tool, which is a Excel spreadsheet that runs you through that exact process with everything I've just mentioned laid out in the tool. Very easy to follow, very easy to open up and implement before every single trade you take. I guarantee do those two tools for a couple months, not even for a month, and you will see the change in your trading. You will be sticking to those 4 things you need to do as a trader. You'll be more patient, you'll be more disciplined, and most importantly, you're going to start thinking like the top 1% of traders. And you're going to start to build consistent profitability. You're going to get funded, you're going to get payouts, and you're going to continue to scale your trading accounts, and you're going to continue to make more and more money as a trader. So if this video has resonated with you, make sure you implement those 2 tools and you implement that. That's how you ensure you actually get a return on investment from watching this video and from implementing the tools. If you found this useful, please like, comment, and subscribe, and share this video with your trading communities and trading buddies. Let's get more of these videos out there because I'm not seeing any content like this out there on YouTube. And I also want to thank each of you who have supported the channel and subscribed. We've hit 20K not long ago. That's a little milestone, but I really, really appreciate those of you who continue to come back and watch videos and stay current with my work on trading psychology. I'm glad to read the comments and see how much of an impact my content is having on your trading and on your life. Anyway, thank you for watching to the end, and I look forward to seeing you all in the next video.